This video is a shortened version of our webinar, in PowerPoint format, that discusses the value of an investment in a CPA designation. The complete webinar includes over 20 minutes of third-party videos available online from the Khan Academy and the Corporate Finance Institute. In this shortened version we have removed that content and replaced it with a brief overview of each. Please request the complete version of the webinar to view the content in its entirety.
Choosing a career is a bit like choosing an investment. And it is probably one of the largest investments you will make in your lifetime. All professional accountants study corporate finance and statistics. A rudimentary knowledge of these concepts is essential if you want to analyze any investment effectively. So in this webinar we'll look at an investment in a career either as an accountant or as an accounting technician. In order to do that effectively, we will first introduce you to some basic corporate finance concepts. Next we'll look at the statistical concepts of median and mean. We'll also look at sources of statistical data that are for the most part unbiased. Finally, we will apply these concepts using a combination of common sense and a dose of professional skepticism. First, a word of caution. Investing in a career cannot simply be reduced to the financial return you can expect to achieve from your investment. First, let's start by examining some corporate finance concepts around the time value of money. Thanks to a gentleman by the name of Salman Khan of the Khan Academy, we'll take a look at some rudimentary corporate finance concepts.
The Net Present Value presentation by the Khan Academy provides a quick overview of concepts involved in analyzing investments. Specifically, the video deals with importance of interest rates in determining the value of an investment, or a set of cash flows, at various points in time. Without this understanding, we couldn't compare the value of different investments or business entities.
These days the internet is a great source of information. But of course you have to pick your sources carefully. At SBA Canada, we like to use statistical data, published by Canadian and US-based government agencies. Often we'll use Wikipedia as a starting point, and sites like Investopedia, Bloomberg, The Globe and Mail, or the Harvard Business Review. As well, most professional associations have fairly reliable technical content. The formula used to determine net present value is shown on this slide. It all looks very scientific and precise. But now let's look at the video.
The Corporate Finance Institute is a private Canadian educational service that provides excellent online training for persons engaged in corporate finance in a variety of industries from banking to public accounting. This video provides a useful explanation of how present value analysis is actually done.
But, despite how precise the formula looks, there's really a lot of professional judgment involved. For example, what discount rate should be used? You saw how the results changed when the discount rate changed from 10% to 11%. Since the model is very sensitive to the assumptions made in building it, net present value analysis can be used to prove just about anything. In this webinar, we will look at the net present value of becoming a CPA by going to university and then taking the 2-year mandatory PEP program. Next we'll compare it with becoming a business analyst technician, which uses self-study and practical on-the-job training. The assumptions we make will be critical. Now, one more thing before we go on to build our model. Once again, we'll go to the Khan Academy and look at a short discussion of some key statistical concepts.
So, let's look at our assumptions. The education costs are taken from the Bachelor of Business Administration program at Thompson Rivers University in BC. There are 24 core courses and 10 more within the accounting major component. Graduates are then required to take a PEP course from CPA-BC. According to CPA-BC, this course costs approximately $13,000 over 2 years. It should be pointed out, though, that costs are the same for both residents and non-residents. This last point is important if students are not Canadian residents. Most Canadian universities charge about 3 times as much for non-resident students. While there may be some justification for this since residents pay tax in support of our education system, what does appear a little unsavory is the fact that immigration consultants take significant fees from Canadian universities and essentially promise that attendance at a Canadian university makes permanent residence almost a certainty for graduates. In addition to education costs, we should also consider living costs. After all, it is pretty hard to go to school full-time and work at the same time. This is particularly difficult for mature students paying their own way. For many Canadian students, living costs are often paid for by the bank of mom and dad. Still, we believe that it's reasonable to allow for living costs. Initially, we looked at the CPA BC website to determine salary expectations for CPAs in BC. But when we looked at Work BC and the Canada Job Bank, we found a significant discrepancy. I'm sorry to say that I don't fully trust the numbers published on my profession's website. The current infographic on CPA BC's website points to an $8,000 increase in median salaries for BC CPAs from $100,000 to $108,000. By contrast, the Work BC website shows a $2,500 decline between 2019 and 2020. What's more, the CPA BC median value is 80% higher than Work BC's. So, you've seen the model in the video from the Corporate Finance Institute. We've looked at expected median salaries for financial auditors and accountants, and for accounting technologists and bookkeepers. One key assumption needs to be built. We need to develop a discount rate. So we went to Wikipedia to find the 25-year median return on the S&P 500. Next, we went to the Bank of Canada to get the average inflation rate during that same 25 years. Then finally, we took off 15% from the inflation adjusted rate to allow for tax. Could you question our methodology? Probably, but as we'll see later on, the model, this particular model, isn't all that sensitive. Now that we've isolated some key pieces of data, median salaries of CPAs and accounting technologists, educational costs, an estimate of living costs, and a discount rate, we can build a model using the concepts discussed in the Corporate Finance Institute's video. You should have enough to do this yourself, but we've taken the trouble to do it for you. The results: net present value of a CPA designation, $382,294. Net present value of a BAT certificate, $451,630. And if you'll remember, bigger is better when we're doing net present value.
When we play with some of our assumptions, it becomes clear that in this case the comparison isn't all that sensitive to changes in those assumptions. Decreasing the discount rate has very little effect. The reason that the CPA designation does so poorly is that the real median incomes of both groups are quite similar. Just as important, the education costs are extensive and occur before students have had a chance to earn any income.